Hello, everybody. This is Bennett Tchaikovsky, and welcome to some more intermediate accounting fun. We're going to be looking at some weighted average shares outstanding, basic computation. But before we get there, we've got this right here. We've got my disclaimer and copyright notice is that the information and opinions in this presentation are those of myself and not my employers or any affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. Presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2026 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. I will make reference to the copyright that belongs to third parties, and that's their copyright. Okay, let's go ahead and look at our next question. So we've got over here on Cedar Inc. Let me get rid of the answer so I can do this for real. Uses a calendar year for financial reporting. The company has authorized issued 15 million shares of 1 cent par value common stock. Listed below is a summary of Cedar's common stock activities. So here we've got the number of common shares issued and outstanding as of 12/31/26 for 3 million. Shares issued as a result of a 15% stock dividend on June 30th, 2027 was 450,000. Shares issued for cash on 9/30/27 were 1.2 million. Number of common shares issued and outstanding as of 12/31/27, and a 3-for-1 stock split of the common stock took place on 6/30/28, assuming no dilutive securities exist. So the first question here is that compute the weighted average number of common shares in computing earnings per common share for 2027 on the 2027 comparative income statement. Okay. So the way we're going to go through and handle this is we're going to kind of say, well, on 1/1/27, we basically had 3 million shares outstanding, and these were outstanding for all 12 months. On 6/30/27, we issued a 15% stock dividend. And when we have a stock dividend, remember, when we do any kind of share splits or stock dividends, the way we have to go through is we're going to retroactively adjust the shares to the beginning of the year. So we're just going to assume that this was going to basically be outstanding for the full time period. Now, shares issued for cash on 9/30/27 were 1.2 million. Now we're computing weighted average shares outstanding. What does this mean? We've got our net income minus the preferred dividends divided by the weighted average shares outstanding, right? So this is what we're trying to go through and compute. So for this 1.2 million shares, this was not outstanding during all of 2027, right? So this was not outstanding for the entire period. In fact, this was only going to be outstanding for October, November, and December. So here, right, this 3 million full year stock splits or dividends, full basically assume at the beginning of the year. But for this 1.2 million, we're going to multiply this by 3/12. Okay. And the reason why we're doing this is because we're doing the weighted average. So my weighted average shares that I'm going to be going through and showing on my 2027 comparative income statement is going to be 3,750,000. Take a look at part B. Compute the weighted average number of common shares used in computing earnings per common share on the 2028 income statement. Now, with this, there's been a change, right? Over here, there was a 3-for-1 stock split. So when I go through and do this, right, it's basically we're taking back 3.75 million, and we're going to go ahead and basically issue those investors 3 new shares. So here with the stock split, this is now going to basically be a total of 11,250,000 shares. And this is basically to go through, and this is essentially 27 on 27. This is 27 on 2028 financial statements, right? So we're adjusting this for the split so it is comparable with the 2028 information. Now, this is the fun one. Now compare the number of common shares for 2028 on the 2028 comparative statement. Well, If we're doing this over here for 2028, right, what we have to now kind of go through and say is, well, this 3 million, I think a better way to do this is to say 1/1/28, you're going to have 3 million shares. You're still going to have 450,000 shares basically from that dividend. But now on 1/1/28, and these are the pre-split numbers. So this is going to be all this 1/1/28. Now this 1.2 million, this is going to be outstanding for all 12 months. So when I look at this here, right, and then if I'm going through and multiplying this by the 3, so my total weighted average shares outstanding for 2028 is going to be 1,395,000. It's going to be 13,950,000. My bad. But if we look at this here, like what is causing this difference, right? So my difference here is roughly 2.7 million. And if I look at this, well, what's causing that? It's really these 900,000 shares, right? That are basically, this is now being multiplied by 12 12s. Before this was 300,000. This is now basically 1.2 million. So this is what's essentially going through and causing my difference between these two amounts here is it has to relate with this because in 2027, these shares were only outstanding for 3 months, but in 2028, it was outstanding for the full amount. That's what's causing why my weighted average shares outstanding is different for each year. So hopefully this helps. I look forward to seeing you on the next video. Have a great day.